Hey folks, welcome to the Rate Update with Dan Frio. My name is Dan Frio, and today we're going to talk about the number one question I get on a daily basis. Dan, what's going to go on with house prices? And now you're going to see people all over mainstream media and YouTube saying, there's a crash. It's going to crash. And they've been saying it for years and years and years. And that's the topic of today. Were they right? Are they right? Are they going to be right? I don't know. So let's get over to maybe one of the world's top savvy investors. His name is Carl Icahn. Let's get over to Carl for a second and we'll just take a quick glimpse at him. This is a young man who made his fortunes on Wall Street, basically buying companies, tearing them apart, buying better companies, trying to restructure them and so forth. How he really made his kind of staple into the numbers that we see today is basically right here. In 1990, Carl Icahn purchased a company called American Real Estate Partners. He liked that company so much, he went in as an activist trying to kind of fix the company, get on the board and fix it. He liked the industry in the company so much, he took it over, he bought it. And so in 50 years or 53 years of doing this, he owns one of the biggest real estate companies in the world. You'd think he'd know a little bit something about real estate. So we fast forward over a little bit, and here's Carl Icahn's net worth. You're going to see back through here, he's $24 billion, this guy's worth. And then it plummeted. What happened through here? Well, we had the pandemic and everything else. And then it says in 2023, he's worth $17.5 billion. But the intriguing part, when you look him up on Google, or whatever you want to look it up on, let's scroll to the top of this. This was the intriguing piece. Up through here, we see the first thing that pops up was Carl Icahn's net worth is $9.7 billion. I thought it was $17 billion. Well, that's a big difference, okay? He bet on a crash that never happened. A crash that, does it sound familiar? The crash that never happened. Now, if you were to go over to here and put in real estate just in YouTube, what are you going to get? This just got worse for real estate agents. The worst housing crash just started. It's worse than even 2008. It's going to be down 80%. The housing market's going to be down 80%. Why would I want to get involved? Well, let's go down through. We got Nick over here. I don't know what he's saying. $4 million in houses won't sell. Don't know why, because there's the crash coming. And then, yes, there will be a massive housing crash. I'm going to stop there. Okay, do you see what I'm getting at? Everybody and their mother is on the crash bandwagon. Well, maybe if they put their money where their mouth was, kind of like Carl Icahn did right here with the crash, they would have seen their fortunes just plummeting. Okay, but no, these guys are seeing their YouTube channel just soaring away because people follow this stuff. Because why? I guess they just don't know any better. So let me make you guys a more informed, let's say, investor, real estate person, anything. Let me just get you some facts. Okay, so what we're going to watch on this channel is I do this every week, or every day, actually. So come back. If you're in the real estate market right now and you're like, hey, I'd really like to buy my first house, or maybe I'd like to buy my first investment property, and everybody keeps telling me this is the worst time ever to buy. Well, think of the stock market. When's the best time? If you actually talk to savvy investors, when is the best time to buy a stock? When everybody's buying? When nobody's buying. Okay, so right now you have people saying, well, the houses are too expensive. We're going to wait for those prices to come down. We're going to wait for mortgage rates to get down to 3%. We're going to wait for the perfect time that I have enough money in the bank. We're going to wait for, well, the crash is going to hit because they're telling me everywhere the crash is going to hit. Heck, it might hit down 80%. I can buy a house now for, $1 million house for what, 200 grand? Now that Stefan said that, well, if you're on that bandwagon, stay there. Keep renting and turn the channel and watch one of these guys so it makes you feel better on a daily basis. But if you want the facts, let's get over to it. So let's go through the economic background of things, what's going on today, because I want to focus in on if you're ready to buy and you're worried about the market dictating if it's a good time to buy or not. Let me just give you this another piece of advice here. I'm a market. Here it is. Timing the market is a strategy and involves buying and selling stocks. Well, let's put in this time, we're going to say it's a real estate. Buying and selling real estate based on expectations of price changes. Prevailing wisdom says that timing the market doesn't work most of the time. It is very challenging for the investor to earn big profits by correctly timing buy and sell orders just before prices go up and down. So guys, Carl Icahn, who is a billionaire, missed this. So if you guys want to continue to stay on the bandwagon that the housing market's going to crash, this is going to crash, that's going to crash, and you're going to wait for the crash that never happened, please stay there. But otherwise, let's go and find out the economics behind this. So what I want to teach you guys on a daily basis is, what's the economic background look like? Is there money available at banks? Are banks still lending? Because if you watch a lot of videos, they're saying banks aren't even lending. So let me give you a little bit of background on what's going on in the industry right now. With mortgages, it's basically business as usual. There's been nothing really changing in our industry other than how rates are factored in. And that's a whole different project that we could talk about there. But in the real estate, in the mortgage business for residential real estate, banks are coming up with creative ideas on how to get you into a house right now. So when people say they're not lending and they're cutting back and they're doing it, it's just because of lack of volume, because people aren't buying. The demand isn't there. I get it. House prices are way high. Rates, they jumped that high in a matter of a couple of years. Rates in 1 year time went from 3% to 7.5%. Well, I'll take that back in 6 months. So you had all this shock in the market. So 2022 was dismal. Now let's start looking forward, okay? And that's what we want to give you the context of. So now let's take that. If you're in the market and you want to try to figure out the timing of this, let's not do that. Let's look at the fundamentals behind everything, and then you guys advise yourself based on all the research that we can help you get on what time or when might be a good time for you to buy. So let's get over to the economic news. Today we have nothing. But this week we have out building permits, which might be a market swear, but it's just building permits. How many are out there and so forth. Servicing PMI, new home sales. These are new homes. Now, what I want you guys to understand, there's existing homes and there's new homes. People, companies built this house. It's a brand new house. Nobody's ever lived in it, and they put it on the market. That's a new house, new construction. Then there's what's called the existing home. Existing homes are basically a house that, let's say I live in now, and I want to sell it and move to another place. That is an existing house that already exists, that people are putting that on the market. What you're saying in today's world, though, is existing houses are not coming to the market because people have low rates, and unless they want to move to another house that they know of, think of it this way. Like in my situation, my rate's 2.5%. So my payments are literally half of my payment is my escrow, my taxes and insurance. That tells you how good my rate is. Okay. So people like me, it's tough to sell my house because where do I go? If I downsize, I'll probably have the same house payment as I do now because my rate's going to be in the 6s versus 2.5. If I want to move to a bigger house, my payment's going to triple. I don't want that. So I stay put. I'm not locked in because if I want to sell my house and get all that money, I can. But what am I going to do with it? Where am I going to live? Okay, so that's why you don't have existing houses coming to the market unless people, maybe you're moving because of your job or anything. But people aren't just moving up and down and sideways right now. So that's one piece of this equation. The next thing is there's over 1 million people in mortgage assistance right now. Let me put it that way. So you have 1 million homes, okay, 1 million mortgages. They're in some kind of forbearance, modification, arrangements, workouts, or something like that. So now you don't have those houses coming to the market. So you got 1 million there. And then you probably have at least hundreds and hundreds and hundreds of thousands of existing homes that aren't in the market. So you have no supply. So if there's somebody out there that wants to buy the house, you're still having bidding wars. And that's why I encourage you guys, visit me on Wednesday evenings. I have a live event. In most cases, I have realtors on there and people asking questions and so forth. And we prove to you guys, there's still bidding wars out there for realtors who are actively, and I say actively, working the markets right now. Okay, so let's get over to the rest of the economic news. On Wednesday, we have crude oil inventories. I follow this because it gives me a gauge on one piece of the inflation front that we face. Okay, we see inflation so high right now. Why? You got lumber up, you got egg prices up, you got food prices up, used car prices were up, you got lumber up, you got concrete up, you got fuel up, and so forth. So we continue to watch all these markets. I bet you guys don't know that lumber is down 80% year over year. Okay, you didn't know that. How can that help builders? Well, they can maybe start giving discounts now or reduce the price of their homes. They're not going to do that. What they're going to do is they're going to throw in more incentives to you. So if you're out there and you're looking for a house, go look at builders. You might even look at using their financing because they're throwing out so many perks out there right now. That's a good option for you. Okay, so let's continue through FOMC meeting minutes. This is the Federal Reserve. They're going to come out and tell us what exactly they were thinking at the last meeting. And then we have on Thursday, the GDP, how strong the country is going. That's gross domestic production. How productive is our society or our economy right now? Initial jobless claims. This is the area where the Federal Reserve says we need more people unemployed. Yes, unemployed, because they want people not getting paychecks so they can't go out and buy stuff. That is in turn will bring down the prices of everything because you have a lack of demand for those products. And then we have pending home sales. Okay, that's we went through that already. And then we have on Friday, core durable goods orders and the PCE. Now, Friday, this news is going to be huge. What is the PCE? Well, the PCE is the main inflation number that the Federal Reserve watches. That's all I'm going to say. So come back on Friday. Let's see how this number comes in because this is going to be a market mover. So without further ado, let's get over where are mortgage rates or where are rates going to go, interest rates in general. Well, what we do is we go to the Chicago Mercantile Exchange, okay, and we look it up. What is the likelihood that the Federal Reserve will change the federal funds target rate at the upcoming meeting? So what the Federal Reserve controls is what's called the federal funds rate. Basically what that is if one bank needs money, they go to another bank and the money they lend each other is financed with this interest rate. So it really doesn't pertain to your car loans, your personal loans, or even your mortgage. So why do we watch it? Well, it gives us a tune of what everybody's going to do. So here's what happens is Federal Reserve raises rates to the banks. Remember this, they raise the rates to the banks. Now the banks in turn say, well, we're going to pay a higher interest rate. So now we're going to charge you guys higher interest rates. So they start jacking up personal loans, credit card rates, car loans, student loans, and all kind of things. So what's the expectation coming at the next meeting? What are they going to do? Well, let's get over to it and let's figure this out. So if we go through this, here's the probabilities. You go down through the chart and you can see the federal funds futures right here, down through here. Where we are right now is 5 to 5 1/4, right through here. Okay. So that's where we are on the federal funds rate. Previously, before last week, there was no other columns in here because there was no expectations that the Federal Reserve was going to raise rates anymore. But now look, now we're at 5 to 5 1/4. Now there's a 27% probability that at the June meeting, the Federal Reserve is going to raise rates. Okay. And you can see that from 5. Let's just start here. 5 to 5 1/4 to 5 1/4 to 5 1/2. Then come July, it's saying, well, if they don't do it in June, well, there's a 30% chance that it's going to happen in July. Well, if it doesn't happen then, it's going to happen in September. Okay, but then what? Well, then they're expecting these rates to start really pulling back and down. So you can see here. So again, as these rates come down, most likely you're going to see mortgage rates come down. So over the next year, the expectations are mortgage rates are going to start coming down. So let's get over to where mortgage rates are right now. So I use this caption. This is from Mortgage News Daily, and it's easy to read. So I'm going to have this link down below if you want to subscribe to this directly, or if you want to subscribe to my newsletter, you're going to get context like this, other newsletters, videos at the end of the day, and a weekly synopsis of what happened in the markets and what's coming ahead. Subscribe to my newsletter down below. But these are the top 6 products people use when they're buying or refinancing a home. These are published by Mortgage News Daily. What Mortgage News Daily does is this. They send out a survey to mortgage lenders or banks and finance companies all over the country and said, if you had a borrower with a 740 credit score, they were looking to buy their first house, it was going to be their primary home, single family, okay? They were going to put 20% down. What would the rate be? Now, again, let's pay attention to those criteria. 740 credit score, 20% down is going to be your primary home in a single family house. That is the best scenario you can come up with when it comes to a rate. So these are probably the best rates you're going to find in the market. Again, these are no individual bank's rates. These are a survey of rates from mortgage lenders all over the country. So these are where rates are. However, if you want to find out what kind of rate you qualify for or what kind of program can you qualify for, Or can you even qualify for a mortgage at all? Or maybe even that first investment property you've been kicking around saying, oh, maybe it's a good time to buy investment properties because nobody else is buying. Might be a good time to buy. So if you'd like to find out more, kick the tires and see what you might be able to qualify for, all I ask you to do is do this. Give us a call. 844-775-5626 or schedule a consultation call down below. You'll have a one-on-one consultation with a mortgage advisor. You can ask any questions that you have. No pressure. Just ask the questions, get the answers, and then if you deem maybe now is a good time to buy, we'd love to help you. So thanks so much for watching, folks. Please come back again tomorrow, but don't forget, give us a thumbs up, subscribe down below if you found value in this channel, entertainment and educational purposes behind it. Thanks again. See you tomorrow. Bye-bye.